Hello everyone, welcome to Market Matters on JP Morgan's Making Sense podcast. My name is Gurps Kharaud, Head of Equities Digital Markets and Vida Portfolio Solutions. And today we'll be discussing the evolution of credit portfolio trading with Olivier Cajfinger, Head of IG Credit, Public Finance, Short-Term Credit and Alternative Sales, and Peter Grant, Co-Head of Credit Systematic Trading. Thank you, Peter and Olivier, for joining me.
Thanks for having us, Gurps.
Thank you for having us, Gurps. It's a pleasure to be with you today.
So Olivier, to start us off, what are some of the big trends you're seeing in credit portfolio trading, particularly in terms of client volumes, and any market structure elements that are driving this change?
Absolutely. In fact, the recent market volatility that we've seen these last few days has really put an additional spotlight on portfolio trading as a key liquidity tool. During the sell-off that we've experienced, there were days where portfolio trading made up as high of 25% of trades flow, even with a bid-offer spread which was being wider. It has definitely been crucial for risk transfer during these times, and portfolio trading has found a new kind of liquidity that we didn't have before. On top of that, if we look at the year-to-date data, clients' volumes have jumped. IG portfolio trading volumes are up between 30 to 35% year on year. And you should think that PT now represents between 12 to 15% of the overall traded volume in the US IG space. This really shows how much people are relying on portfolio trading these days.
Thanks, Olivier. And Peter, over to you. How does JP Morgan manage its risks when it comes to different kinds of credit portfolio trading? And how are we differentiating ourselves versus some of our competitors?
Sure. I think an interesting thing about credit is the market structure change that credit portfolio trading has brought in over the past couple of years. And credit has moved from being a trading protocol where you're buying one bond and then going out and trying to sell that exact same bond as a dealer, to one where you're buying many bonds through a portfolio, or you're buying bonds through your algo, or buying through the ETF channel. And as a result, it's turned into a liquidity aggregation problem. It's very important for dealers to be able to internalize the liquidity between those different trading protocols in order to minimize their turnover time. And it's not just to be able to sell the same bond anymore. Balance sheets have grown. So being able to manage factors, understand what the important factors are, and decide when you should be managing factor risk versus managing gross risk are all important parts of the toolkit to be able to effectively trade portfolios. As a result of that interconnectivity, dealers are really only as strong as their weakest link. And JP Morgan has done an excellent job in retaining the risk-taking culture and DNA that was so important when bonds traded more in a single name format, and marrying that approach to a more systematic pricing methodology that helps it excel in portfolio trading and the algo.
Thank you, Peter. Very insightful. Olivier, given the changes that we've seen in the market and some of the volumes that you were talking about earlier, what changes are you observing in how people trade today compared to the past? And how important is the investment in technology becoming for your business?
Yes, absolutely. And we are definitely seeing a shift in how trading and PT trading is done. Portfolio trading has turned into a one-stop shop solution, which is super valuable for our investors when fees are constantly being squeezed. It definitely offers a great value proposition for our investors. And the toolkit has grown as well, with more use of TRS, more use of ETF, alongside the usual cash bond business that Peter mentioned earlier on. A few years ago, portfolio trading was mostly for strategic and directional trades, but now, with competitive fees, the ability to handle big trades, sizable trades with an advanced technology and a variety of asset classes, it is being used more and more for tactical trades. This shift really highlights, in my view, how important it is for us and our clients to invest in technology so we can keep up with our client changing needs.
Thanks, Olivier. So you've explained it from the sales side. Peter, on your side, on the trading side, how are you embracing this change?
Yeah, I think the portfolio trading And the market structure that we were talking about before at large has massively liquefied the credit space. So both in terms of the amount of bid offer charge, we've seen a significant amount of compression there, and in terms of the number of products that trace on any given day, there's just much more breadth in the market. And with more trading comes a lot more data and a lot more information that clients should be able to leverage. But so far, there hasn't been enough of a link between the data that dealers have available to them as they watch flows come in and out and what they're making available to clients. And I think that a tool that we've created at JP, Vida, really tries to bridge that gap. And it lets clients both look at liquidity on a line-by-line basis for trades that they've already created. And I think more interestingly, lets clients lean directly into JP's instantaneous liquidity and current risk to build trades that will provide them best X. We plan to continue building out this platform and leading heavily, providing market insights and other data that we think clients will find useful. And being able to lean into that type of data should be a real differentiator for our clients, both to expand their breadth, but also to reassess the market. And as banks change the way they trade, let clients react and change the way they trade as well.
Thanks, Peter. That's a great introduction. And that's where myself and my team have worked really closely with yourself and your team, as well as Caj's team, to bring some of these capabilities for clients in a digital way. So marrying some of the things we've talked about earlier, Vida Beta1 is the latest iteration of Vida Portfolio Solutions, which provides a range of different capabilities from creating portfolios to managing them, analyzing them, and then reporting on them. And some of the changes that we've spoken about in terms of not only analytics and pricing or products, many of these different things are on our roadmap that we have coming forward. And we're really excited for some of the things we're going to bring across TRS, ETF, and all of these different areas. The platform launched in November last year. We're already seeing impressive take-up. And I'm sure with many of these different capabilities we've planned, we see this as really a hub that's only going to grow as the investments and our clients' interest in portfolio trading continues to grow. And now, as we conclude, talking about some of the future developments, Olivier, what trends do you think will be shaping the future of credit portfolio trading?
So, looking ahead, portfolio trading is definitely becoming more of a cross-asset tool. Our trade markets are rich, and the fixed income offering is wide. Clients are using PT across different asset classes like investment grade, munis, EM, and structured products like RMBS and MBS. Some clients are fixed income agnostic, and being able to make asset allocation decision in one go and in size is getting more popular. This is happening globally too, with cross-currency portfolio trading being something clients are considering and using more and more. Another trend that we are seeing is also the rise of thematic trades. More clients are interested in this, often driven by reverse engineering and developing specific investment theses. And to help with this, we are working on narrowing the bid-offer spread, making these trades more accessible and cost-effective. These developments are really setting the stage for the future of great portfolio trading, in my opinion, giving our clients more flexibility and opportunities in those markets.
Thank you, Olivier. And thank you, Peter, for sharing your insights on the evolution of credit portfolio trading. It's been a really insightful discussion. And for our listeners who are interested in learning more about Vida Beta1 that we touched on earlier today, please check out the show notes where you will see the relevant links to learn more. Thank you.
Thanks for listening to Market Matters. If you've enjoyed this conversation, we hope you'll review, rate, and subscribe to JP Morgan's Making Sense to stay on top of the latest industry news and trends. Available on Apple Podcasts, Spotify, and YouTube.
This communication is provided for information purposes only. For more information, including important disclosures, please visit www.jpmorgan.com/research/disclosures. Copyright 2025 JP Morgan Chase & Company. All rights reserved.